So Lemonade hit 2 million customers today. Very exciting. I want to talk about what does this mean for this year and this quarter? What can we get from this information right now? What does this mean longer term, if we think a little bit further out? And then how are customer acquisition trends, how's their customer growth changing or improving over time, and look a little bit at that as well, so we can understand their Lemonade's growth story as investors better. So first of all, for this year and this quarter, Lemonade did 2 million customers right now, and we knew, I have this other tweet right here I'll bring up, they're 15,846 customers short of the 2 million mark at the end of Q3. Now, 38 days later, they reached 2 million. So that works out to 417 customers per day so far in Q4. At current Q4 customer run rate and current premium per customer of $362 would add 13.9 million in-force premium for Q4 for a total of 732 million. So essentially, if they keep the exact same run rate of customer growth with the same premium per customer, they're going to hit 732 million of in-force premium at the end of the year for Q4. And the guidance says 726 to 729. And of course, if we increase premium per customer anyway, that's going to increase the entire customer base that amount. So I put this into my model. By the way, lots of Lemonade investors do follow me on Patreon and support the channel. If you want to support the channel, get full access to the model, I encourage you to join my Patreon. I will be continuing to add more exclusive content there as I'm able to as well, and continually updating this model so you get a real-time view of that yourself, and can of course make your own copies of the model and play with it yourself. But for the end of this quarter, I've put in the exact same customer run rate for the rest of Q4, which works out to they'll end up with 2.023 million customers at the end of the quarter. I've also put in a small increase in premium per customer. They've had major jumps in premium per customer in quarters past, but this, since in the last several quarters, the last 4 quarters, they've definitely had slower premium per customer growth as they're really trying to more attract renters and pet insurance customers, because I know those are more profitable and they're being more conservative with how they spend money and acquire customers. So if you look at the average premium per customer change, it's been about 1 point, the bottom corner here, 1.7%. So that's what I've put in, 1.7% premium per customer change gets you about $6 more of premium per customer. Of course, that applies to all 2 million customers, not just the new ones that are added. So all 2 million gets you to $745 of in-force premium. So we're not going to look at all the entire quarter right now. I'll save that for another video, but it'd be a pretty solid beat over where their guidance shows 726 to 729, which is typically the case. Lemonade typically gives guidance and then beats it. That's where I'm kind of going to expect their in-force premium might come in for the end of the year based on this sort of additional 2 million customer data point that we got released today. And then on Shai's tweet about the 2 million, I said, hey, that's a huge milestone. Can't wait till you 10x that, or 20 million, maybe around the early to mid 2030s. Of course, there's tons of assumptions, and it's really hard to look out very far into the future, but just for fun, if we're scrolling out into 2030s, I have them hitting 20 million customers in the first quarter of 2034. A little bit over 10 years away, I have them 10x in 10 years' time, 10xing the number of customers they're at now. Now, if you look at that in a graph, here's where I have a nice trend line of where we're going all the way out to 2030, where we're at that 20 million customer mark, and of course could go even beyond that. If we look at the history of the customer growth so far, it's been a pretty straight line. It's actually in the last few quarters it's slowed down a little bit as they've slowed growth a little bit. Here, this big jump was also when they did the Metro Mile acquisition from Q2 to Q3 of last year. But of course, they're as they've said, since around that time, they're being more conservative with their growth in the current environment. And now we're looking at net customer growth on a quarterly basis. And to be really clear, this is net customer growth. So this is how many additional customers did they end up with at the end of the quarter. In actuality, there's more people than signed up for the product or signed up for Lemonade than this shows, because there's a number of customers that churn away each quarter or leave Lemonade, and then they're regaining those customers plus adding additional ones. So here's the net change, the overall change on a quarterly basis. And the first thing that's probably going to jump out at you is Q3. Q3 is always the best quarter. This one especially was huge because part of this massive growth was the Metro Mile customer jump. But otherwise, even other years, including this year, we're in a sort of a lower growth mode. Q3 was 77,000 customers relative to Q2's 50, 31. And other years have followed similar patterns where Q3 is quite a bit better than the other quarters. Also, it does look like Q4 tends to be a little bit weaker. So especially relative to Q3, like here in 2020, we had a drop from 127,000 down to 58,000. And then 2021, we had 157,000 down to 63,000. And of course, a huge drop here where they really had the acquisition of Metro Mile and then they turned off growth. So it's likely we're going to see a bit of a smaller amount of customer growth, probably even smaller than Q1 or Q2, which are around 50,000. And if you look back at my model here where I input based on the 2 million customer, data point, I'm at 38,000 customers growing in Q4. So that makes sense. So we drop this down. We'd be, a little bit higher than Q4 of last year. Okay, but now I want to talk about for Lemonade, how are the underlying financials of this customer gain changing or improving over time? Because there is one, wrinkle to this. And remember, this is only the net customer growth, the change in overall customers, and it doesn't include how many customers are churning away. So if we add that in, and then we think about how much are they spending for each customer they're getting, we get some interesting numbers and results. And I have that on my main model, current model tab here. Scroll down kind of a little ways down into the model. There is a customer annual dollar retention, churn, customer acquisition costs. And I have it highlighted here, row 35, customer acquisition or dollars of ad spend per customer. This is different. This doesn't include a fixed sales and marketing that they define and release in their 10Q statements, but just their CAC spend or customer acquisition cost expenditures. And you can see where that's been trending down over time, where last quarter it was as low as $80 per customer, but typically it has been higher in previous quarters, more around $120, $140 range, even higher than that. Right now they're at that $80 per customer amount. And then coupled with that, you can also then calculate, hey, how much premium are they getting or IFP for the amount of customer acquisition spend that they're making? So at all-time high right now, it's about 4.7, and it was 4.4 last quarter. And it was lower when they IPO'd. It was around 2. I think in their IPO S1, they talk about it being 2. And then somewhere in one interview or something, they talked about it being more close to 3. And now I'm seeing it close to 4 or even to 5. And if we look at this graphically, this in-force premium gain for CAC expenditure, you can see all the way back again to 2020. It starts about 2. But then roughly around the start of 2022, it's really started to take off, where it went from 2.24 up to like 3 range. Now the last 2 quarters are at 4.4, 4.7. So there's a really large sort of underlying improvement in their marketing spend and how much premium they're getting since the start of 2022. This is partly due to a few reasons. In part, it's because their premium per customer has been rising, especially if you look from the start of 2022. That has been rising, so you're getting more premium just from your overall fleet of customers as they mature, as they get more products. You're naturally getting more and more premium from every single one of those customers. So for every new dollar of sales and marketing spend you're spending, you're just gaining so much more premium as a whole. But this trend has also been improving quite a bit since 2022 because the customer churn has been dropping. So if you look from, especially again, if you look around the end of 2021, 2022, this is, I think, when they're starting to roll out more products in more places, so more products are available in more places. Their churn for that was in the 30s, even as high as being in the 40% range, which means, in a 12-month period, 33% of your, for example, in this quarter, 33% of your customers are going to leave that were there 12 months prior. Huge number. Really, really big problem at the time. Big discussion here for people that were following Lemonade. But since then, as they rolled out more customers or more products, more places, customers mature, current fleet of customers matures further. It's really improving. It's come all the way down to 18% or approximately 18% in last quarter. But that sort of started, you really start to see that coming down the start of 2022. So that's also improving this amount of premium they're getting for the amount of ad spend they're spending, because they don't have to make up as nearly as many customers that are leaving or losing. So you're not having that fight there, because less and less customers are churning away. So you're getting more and more of these underlying positive trends. This could also be jumping and spiking this in the last couple quarters, simply because Lemonade is trying to target more renters insurers, more pet insurance customers, which are going to be less competitive markets than, say, an auto insurance or home insurance market. So you don't have to compete as hard. You're not spending as much, because there's just less other people throwing less ad dollars for those same customers. So that's, in a way, that to me, that's Lemonade's big part of their secret sauce. They can get customers super efficiently and even profitably in these unloved insurance products, such as renters, especially such as renters, where other companies, other insurers don't really want them, don't want the administration of them. Lemonade has figured out how to administrate them effectively and with very little human resources and very real overhead, and then they can on-ramp those customers at a very affordable price and then grow with those customers over time. That's why, to me, that's a huge part of the Lemonade secret sauce, and why this trend, I think, even will keep growing over time as they get customers in the door for lower, more affordable prices, but then those customers stick with them long term, or at least some of them do, and they become very profitable customers. So if you look out even longer term, it's a little bit choppy here depending on how I've modeled it out exactly, but here we are in 2023 where I have that 4.7, but I have it going out to eventually like a 10 plus ratio in that range. As the fleet of existing customers keeps growing in the amount of premium they have, you get more and more value. You're snowballing for the amount of your spending to sort of add new customers in the door. These numbers could also be improving as well, simply because they are trying to grow less. So you get the lowest hanging fruit first, and that's going to be your most profitable fruit, or I should say the least difficult to obtain. So that's why, in part, why they're paying only, this last quarter, only $80 per customer, which is really, really cheap even for their own metrics, for their own comparison. And it'll be very, very cheap compared to other insurers to get a new customer. Anyways, though, I'll flip back to this graph to end off here. Thank you so much for watching. Again, if you want to get this full model, feel free to join my Patreon. And you can follow me on Twitter at paperbag_invest. And of course, hit subscribe on YouTube if you haven't done so already. Thanks to you so much for watching. Remember, it's in the bag.